What's up, everybody? Welcome back. Hey, what's up, everybody? Again, this is your boy TSD back with another episode of Bullish Top Stocks to Watch this week and why. Before we jump into it, I just want to say I appreciate everyone taking out some time to watch this. Hopefully, it's helpful to you. It's definitely helpful, like I said, for me to kind of plan out my week, what I'm going to do, most importantly, what I'm not going to do, and kind of have some semblance of a plan, but also do your own due diligence. I got to say that I can't give you investing advice. These are just my options. Take with a grain of salt. Do your own due diligence, please. And also, hey, drop a subscribe here on YouTube. It makes me feel good about myself. So help me feel good about myself. But also follow me socially, basically real_bullish, wherever you get your social media poison, Instagram, Twitter, stock twits. I love stock twits, just to kind of see all the shit people throw at each other. Reddit, not really active there, but still, hey, follow me socially. Let's have a conversation, a dialogue. We might not agree, but also I love those conversations. And we might not change each other's viewpoints, but it's also good for me to kind of get that. And hopefully it's helpful for you to kind of engage as well, to kind of learn a little bit something, from each other, right? But anyways, let's jump into it. Not a bad week for me last week, but also it wasn't a bad week. It wasn't a bad week overall for the three indices, moving sideways for the week to slightly positive for the week. It's the third straight week of positivity for the Dow and the S&P, and it's the fourth straight week of positivity for the NASDAQ. And kind of leading into that, kind of what were the things for last week? Recent data shows that retail sales were rising in September at the fastest pace in 3 months. So that was pretty positive for last week. We also had the start of earnings seasons, as we've been talking about for a couple weeks now, with kind of banks and financial institutions going in to earnings seasons last week. And, overall, banks weren't showing out, like they weren't killing it, but also they weren't having anything unexpected, which at least was kind of moving that sideways, but slightly positive thing. But also there's a big rumor going around, or not a rumor, but I think it's going to happen. A big tech bill being brought up in the Senate by Senator, I think it was Senator Josh Hawley. So, there's still some uncertainty going into next week. We also have, no pre-election stimulus that has been talked about or approved yet. And, at this time, is it going to be passed? I wouldn't think so. I'm not bullish on some kind of stimulus being passed before the election. Definitely after the election, I would think both parties are kind of saying that that's the plan, but nothing pre-election, but also nothing from a tweet yet. No orange swan theory coming in and saying, hey, fucking no, we're not going to do this, right? So still kind of iffy about that one. Of course, along with that uncertainty for, the past few weeks, we had the start of election season. We had early voting start next week. People are showing out for that for sure. So we know that markets don't like uncertainty. So there's a lot of uncertainty coming in, over the past few weeks, but definitely for this week coming up as well. But it's interesting though. I'm seeing that, the markets and, analysts are more and more bullish about like a Joe Biden kind of win. So that's pretty interesting. But obviously we also have COVID, all of the uncertainty we got going on. We still have COVID kind of happening, a vaccine in the question mark area, like how soon, also we see like recent spikes in the United States as well as Europe. So, still comes a lot of uncertainty there. So all that to say, hey, markets are looking crazy right now. Markets are looking uncertain. I'm just looking at the cues right now on my screen. Hopefully you can see it. If not, I'm kind of fucked. But basically just wanted to show that, hey, moving sideways, and I use QQQ. I can actually zoom out a little bit. I use QQQ. I like to use SPY and DIA as more of like a general, looking at overall indices. These are ETFs that you can trade that mirror the larger indices for the S&P, Dow, and the NASDAQ. And I like to look at these to kind of get like a high level of where things are moving. But what interesting is that you'll see is a lot of them are really close, like that, definitely Qs, which is NASDAQ, SPY is S&P, but specifically this Dow, like they're very, very close to recent highs. So whenever, me, like I don't like, and you could think of these ETFs as more, stocks to trade, right? Exchange traded funds. But basically, I don't like buying in the middle. I like buying when the break of or like support. So I don't like to buy in the middle. Right now, we're at that middle area where it's like, what are markets going to do? How are indices going to react? Overall, for the past 3 or 4 weeks, it's been pretty positive. But as you know, like that can change at the drop of a hat. Especially when we're kind of extended off of that. What do I mean by extended? Hey, we're really close. Like if we're looking at the Qs, we're really close to this highs of 303, and those aren't like little highs. Those are all-time highs. And we're only like, we're pretty close closing into that, especially for the Dow. But all that to say, hey, we've been making gains recently, but also I'm cautiously optimistic. All of that news I just rounded up and looking at the indices, hey, we're pretty close to there. But anyways, let's jump into some of the stocks I'm watching for the week and why. And of course, I don't think there's going to be any kind of question with what I'm going to start with. It's going to be Tesla, because Tesla is my babe. But also, I was mistaken. I thought that Tesla was going to have earnings next week. I don't know why that was like stuck in my head. I looked at a few different places, and they were saying Tesla's earnings were not this coming up week, but the next one, I think on the Tuesday. But it's actually on 10/21. So I kind of played this all wrong for the last couple weeks. But hey, that's what happens, right? So we're actually going to have earnings for Tesla on 10/21 post market. So when I think that's a Wednesday, 10/21. Yeah, that's a Wednesday after hours. We're gonna have Tesla. So you still have a few solid days of trading. You definitely have 3 good solid days of trading coming in. And to kind of look at what we're expecting there. But overall, Tesla up for the year 425%. Second only in the NASDAQ gainers this year to Zoom, which is up 700%. So super, like a lot of growth coming in. And if you zoom out, you see exactly that growth that we're talking about, specifically for like the start of the year as well. Coming up really, really strong, over these lows like 71 or whatever. But still, we're expecting, with all that being said, they're still expecting for this quarter increase of revenue by 31% year over year to 8.3 billion. That's what analysts are expecting, more or less, for Tesla here. I'll just keep that up right there. And so really good, but also looking at this, I think that it's going to come down to deliveries for Tesla when they announce this week. And to see that sustained and increased share price coming in, we saw mixed reactions with that third quarter deliveries of 139,300 versus the expected 137,000 that the market's kind of like expected at first. Then they had kind of like that extended goal of 140,000, like closer to when they were going to reach delivery numbers, I think maybe 3 or 4 weeks ago now. So all that to say, hey, it's going to come down to delivery numbers. And what the market has right now is at 500,000 deliveries in their head, Same as you saw at Battery Day. They wanted that like 1 billion, trillion, gazillion, mile battery, and they didn't get that. But they got really good, amazing tech performance, amazing stuff that was shown in Battery Day, but it wasn't that buzzy word, that super sexy battery. So I think you're going to see more of the same here, even though Tesla, I think they'll be pretty close to that 500,000 numbers. A lot of headwinds that come into that. They had their factories closed down for sometimes. They have COVID uncertainty going on, but also I think they'll be pretty close, if not hit that. But also, if they don't hit that, I would expect to see some sell off there. Like I said, I think the market's going to overreact basically to anything that's not by that 500,000, that 500,000 delivery number that's getting floated around, similar to how we saw Battery Day. They didn't get that buzzy word, and you kind of saw a sell-off. The market was like, nah. I still think, though, that the wild card for all of this is going to be that Cybertruck. We really haven't heard a lot about it. In the shareholders meeting Battery Day in September, we did see kind of like Elon kind of like mention, oh, yeah, we expect, and I think it was at the end of the Q&A, he was like, yeah, we expect we have about 500, 600,000 pre-orders so far. That's huge. Like, I think it's huge. There's only, to put that in perspective, the F-150, as I said previously, is the highest selling truck in the United States, and there's only 900,000 of them produced year. Not say only, but 900,000 produced each year. And Tesla already has, at the time of September, 500 to 600,000 pre-orders. So I think we'll see. We'll learn more about that there, and I think that might be a wild card. That if we don't get that buzzy number of 500,000 deliveries for the so far, then you'll see that kind of play into there. Overall, for me, like I said, hey, y'all know me. If y'all watch me, I'm very bullish on Tesla overall. I'm a fanboy. I will probably buy a Tesla one day with the earnings I get from Tesla, But short term, looking at this ER, the uncertainty at the price point that they are now. Right now, they're trading right under 440, which if we look at the charts, and we'll go into it right now, is pretty close to where they were having very hard resistance. Specifically, they were having really hard resistance at 450 for a while. As we see here, they broke out of that. But so they broke out of that kind of flag or pennant, whatever you want to say. But they've kind of been playing in that same area. So still, I think that, overall bullish with Tesla, but also like where they are now with their price point and kind of like not really holding that 440 support. I actually tried to get into them day trading wise in the week, and we can break it down a little bit further. Maybe while I was looking at them, they were playing with this 450 line, and I was like, okay, cool. If they were at support, or they were using 450 as resistance ish, or as support actually from their previous resistance, but it doesn't want to hold it. It broke it. You see the here, on what is that? 10/14, which is like Wednesday, right? Yeah, Wednesday it broke it, it smashed it. Wednesday had a great fucking trading day, and then it kind of sold off from there. I was hoping that it was going to hold support at 450, and that's kind of where I played it. So I didn't play Tesla all that well last week from a day trading perspective, but still, I was like, okay, cool. Hopefully it's going to hold that. You saw this really bearish double top here early in the morning, and I should never. I hate playing opening range breakouts, especially like over VWAP under like the VWAP date, so it didn't hold that. You saw a really hard double top, and it's been selling off since then, really hard double top. It tried to come back again. Now it's not liking this 456 area. So still overall, not holding that and kind of selling off there. But also, if they have a really good, if we come back and we see Tesla have a really strong, earnings presentation next week, I think we'll see, a really strong gain there, because the markets don't seem to know what they want to do with it yet. Why do I say that? Well, if you break it down to the week level, I was looking at this earlier. So, and I actually have where I'm marking it for really looking at reentries, right about that 500 mark. But why do I say that? It's because it's like a almost cup and handle kind of like a pattern here on the week level. And with cup and handles, you see kind of the break of this. So I think, and you definitely see it coming down with volume, right? So Tesla for the past, month, 2 months, they really haven't been trading with a lot of average. And I think because people were looking at that sell-off here, you saw, volume coming in, it couldn't break this level. You saw the volume over average. So you see like here is the volume, this is the average line. It actually was bearish from there, and then the sellers started getting exhausted, and buyers started coming in, but with no sense of like volume there. I think they're kind of waiting to see. We're at that really weird lull in the year where you're kind of waiting for earnings and stuff. So I think that great earnings are going to, if great earnings come in, we'll see that volume pick up over average. We'll see it break this 500 level, which is why I have an alert here to send me a text or whatever when it gets close to that. And I think with the cup and handle, you basically see kind of the break of the first lip of the cup, and then you kind of see a sell off from there. But hopefully it breaks this, sells off a little bit, and then it uses this 500 as support. That's how I'm playing it. I don't think I'm going to be day trading this anymore until kind of people figure out what they want to do with it. And judging by this for the past 3 weeks, the sustained loss in the bullish trading volume coming in, I just don't see it's kind of just floating there. And I think people like me are waiting to kind of see what's going to happen with them. But you definitely see, it's not even holding the support of 450 that it broke. So it's kind of meandering there along the ways. Still overall, very bullish, but just at this point with the price extended as much as it is, really close to that resistance line of 450, 440. I'm kind of just waiting to see what's going to happen. But there's other ways to play that as well. So I'm actually calling out Tesla, but also like other EVs in general. One of them specifically, it's the play on their, I guess you can say their Chinese counterpart, which is NIO, NIO. And if you look at this pattern, oh my God, look at that candlestick. So people, I think, are playing this, they kind of got, a little bit cool on Tesla. Now they're going to go in for those other value ones or those growth stocks. And NIO is that thing right there right now. It's, basically making higher lows, which is super bullish. I'm not too concerned about this double top here because it sells off, it finds that support, goes to the next leg, another double top here, finds that support. So if it keeps playing that kind of pattern there, it's making higher highs and higher lows and going to the top. I think we, right now, I've been watching this for a few weeks. I missed actually this latest one, but you see kind of in the difference from Tesla where the volume wasn't at this line, not even close. Here you see, bam, trading volume there. RSI is a little hot right now, but that's okay. It's a high flyer. It had a really big move lately. But also what I love about this, and it's super sexy to me, is this moving average convergence divergence isn't even close to touching. Like it's taken off. It's diverting even further in the bullish territory, even though RSI is a little extended. That's fine. because at least the other indicators looking at it, volumes here, that huge ass green candle, you might see a little double top here and a sell off, but I think that's to be expected when you had such an increase in the movement. And you kind of do see a little bit that if you break it down for the day, still averages, for the past 3 days, 3 trading days at least, have been very bearish, or sorry, bullish. You see that moving average convergence divergence getting fatter. You see it hitting that line of RSI, but this is a hot runner. It can run 70, even though we know, hey, the RSI between 30 to 70 is not normal, but that's the range you look at. Anything above 70 is more trending into the overbought area, so you think some correction is coming soon. This can still run until 80. It's about to hit that. So I think you see that here with the price level on Friday, hitting that double top of 29 and maybe cooling off a little bit, but still, I like that because, hey, shit isn't just going to run, but at the same time, it's showing that pattern continually of hitting that top, trading, hitting this top, being extended, cooling off a little bit, and then coming back for the next leg of it as well, right? You see it here, you see a little bit less here, and then you see it kind of doing the same thing recently. So I kind of really like NIO. The other great thing about that is it's an EV play. So if Tesla shows out this week and they kill it, Niall's gonna like rising tides, right? It's gonna rise all the boats. But the way I've been playing this, the way I've been playing EV this like the past 2 weeks with Tesla kind of being meandering in that kind of like no man's land of like, is it gonna pop? Is it gonna not? That's great. I mean, I understand it, but the way I've been playing it is playing the ETFs for EVs. So Drive and iDrive. I like both of those together. Looking at iDrive specifically, if you look at this week chart, and this is kind of what I meant by cup and handle, right? So you see a little cup here, you see volume coming in, but the interesting thing is this bullish volume is there. You see the break of this, right? So it's using that first lip as the break this, but now it's using it as support. You see a little bit of a sell-off here, but not too crazy, but you will see some sell-off there, but it's still using this level that it broke of 35 as that support to then make a new base going up. So iDrive is an ETF in EV. They have other plays. I think they have like industrial and they have some consumer in there as well. So that's one. The other one I really like is Drive. I played Drive like twice last week, just because like I actually recouped my losses from Tesla with an ETF, which is crazy. But still, like, similar story there. It's gonna really parallel the broader EV landscape, but also there's like tech built in there. There's consumer, like I said, there's industrials in there, but still same thing. Cup and handle formation here. You see it break this level of, Old Humble Distilling Company. Man, this shit's good. This is just their straight whiskey, and damn, that's good. Anyways, not a plug, but still, like, that's really good. Small local business here in Houston and Humble. Hey, get it. But anyways, so you see this cup and handle play here, right? You see where it breaks this left lip cup resistance of 1784. That's when the volume come in. Still sustained a volume there. And I've been playing this, like I said, for about 2 weeks now, really successfully, at least in my eyes, using that as like a avenue to play that's safer to me, because ETFs aren't as sexy, right? They're not as fun to play. They're kind of more sustained because they're spread, not just your eggs in one basket. You can say, hey, I want to play EV, I want to play tech, I want to play consumer. They have ETFs for different ones, and these are the two to me that were like the best look at. I called these out last week, and I'm still playing them this week as well, especially since we don't know maybe it'll be different now. But anyways, as Tesla was kind of winding sideways and not kind of, to me, like too extended for the price. I was waiting for a Tesla drop. But that didn't happen. But that's fine, as I day traded it this week, it wasn't as successful. But that's fine. The other one I want to call out, the other earnings we have before I keep on going with Tesla, you know how much I can talk about Tesla, is Netflix. And why am I going to call out Netflix? They actually have earnings on 10/21 post-market. So that's on Tuesday, right? Tuesday PM is going to be the Netflix NFLX earnings. And actually, a similar success story from, COVID. They're up 64% for the year. But the thing with this one, just as we said with Tesla, it's going to be delivery numbers. With Netflix, it's going to be subscription numbers. And as you've seen for like the actual, year to date, so Q1, they had 16 million new paid subscribers being added. in Q2, they had 10 million. For this quarter, they said it's going to be about 2.2, but I think that's a pretty conservative estimate, just to kind of beat expectations of that. But general analyst consensus is about 3.3 paid subscribers, mostly coming from the overseas market that isn't as saturated with Netflix. So Europe and Asia and shit like that, right? Markets that Netflix doesn't really have that area of penetration in yet. Still though, like I caught the number 16 million in Q1, 10 million in Q2, and 2.2 ish to 3, whatever, 3.3 expected in Q3. You see those numbers going down lower and lower. So I think that people are very cautiously optimistic about Netflix because hey, 64% year to date during COVID. That's nothing to sneeze about. It's great. So kind of similar. I'm overall bullish with Netflix, but for the short term, you got a couple worries. The rate of new subscribers coming in being diminished, and also like what's going to happen after COVID. Are those subscribers going to stay? Are they going to go somewhere else? But especially post with kind of like all of the disruptions to all different types of studios, kind of like to the production of their new shows. Like, are they going to be able to keep the sustained amount of new shows coming out into this year and next year to keep those subscriber bases that come in there sustained as subscribers, right? If there's no new shit coming out in 2021, why the fuck am I gonna? Well, actually, I don't pay for Netflix. I just use, I think, someone else. But anyway, and then that being said, Netflix earnings coming out. The reason why I wanted to call this out, though, is because I think it's at a really interesting inflection point. And the reason I'm saying that is because it's trading at its all-time highs, 573.37, basically the all-time high. And it ended the week. It tried to touch it, and then for last week, I'm looking week over week right now, it touched it and bounced off. But as you see with Tesla, the volume really isn't there, right? But you definitely see kind of like another like little cup and handle trying to form there. And the reason I like this, because it actually follows when I think of a traditional cup and handle, where you have kind of like a base coming in, the low coming in, but also here like volume is bearish but not over average. And then as you see the right side of the cup forming, like here, you see that increased area of volume coming in. As we see here, increased volume coming in, even though some of it is a little bit bearish. The bad thing, the RSI is really cooling off, but the most interesting part here to me is this MACD wants to convert. Like if you're looking week over week, it's been very bearish overall, especially since the week of 831. You see a little, but it mirrors it. Little cup there. And once it breaks this, is a more interesting point. I'm gonna buy it honestly if it breaks this level of resistance, or it bounces off and finds a new area of support, which at the week level looks like it's the EMA 10, right? But also what I like about this one is it kind of has like a really, really good Fibonacci retracement. And maybe I'll do a video one day about fibs, but basically, hey, when you look at it here, if you look at like when it broke here, you can use this as a way, and it holds trend for the most part of saying, hey, if I say from this low point to this point, it's using 38.2 levels as an area of support. Okay, cool. I know that, I want to see if it's going to hold this somewhere else. The interesting thing I think about this one specifically, you can use Fibonacci defensively, but also you can use it offensively. And what I mean by that is to see what the price target is going to be. If I know that this is the high, this is a low, we just saw an area of support, which is the 38.2 level. If you look again at this 38.2 level, it actually is sitting right here where it's at right now, 571. So that's going to be interesting to see what it does from this point, because you can use, to me, Fibonacci as a way, with other indicators as well, to kind of gauge what it's going to do next. Since it's held both of those numbers kind of similar over time, I'm going to use that as another indicator. You never use one indicator. What are my indicators? Fibonacci retracements, volume, RSI, MACD, price level, whatever the case may be. You use a fuckload of indicators to put you in a better position to trade more effectively. And Netflix is using in a great way Fibonacci as a way to say, hey, this is what it's starting at. This is its support. This is its resistance, and I'm going to use it again as we go forward. Like I said, right now it's really in this weird channel. But once it breaks it, if it does break that, I think it's going to be a great opportunity, because we've seen this level as a really smart or solidified area of resistance, and I think it's going to be another area of support because also Fibonacci is saying, hey, like, hey, this is something that's going on, So it's holding pattern, which I love. But anyways, we'll see what's going on with the sub numbers when they come out on Tuesday. This is really good. Moving on, and I give what the market gives me, and I'm using earnings. Oh, right now, and you know me, I like earnings play. I don't chase earnings. By the way, you buy the break of, or you buy the bounce from. You know what I'm saying? Like, I don't like to chase earnings. So play earnings your way. But also, the next one I'm going to talk about, because I have earnings this week, is Chipotle. And Chipotle is delicious. Their chart looks delicious, pun intended. But they're up 60% year to date. That is fucking high flyer. That's basically what Netflix is at. And this is a fucking restaurant, right? But not just any restaurant. It's a digital play restaurant, right? So super high flying stock, driven really by its mobile adoption. They have earnings coming up. All that being said, they have earnings coming up Wednesday again. So Wednesday is going to be Tesla and it's going to be Chipotle post market, right? So there's going to be, that's the bad thing about having all these great earnings back to back to back. Last week I didn't play earnings just because, I don't fucking trade banks. They're boring. But anyways, well, unless they're investment banks like Goldman Sachs or something. But anyways, this week I'm playing earnings because there's a lot of really cool earnings. All of them, if you notice, have a component of digital play to me because that's what's been the driver in COVID, right? The digital adoption play, right? Chipotle, more of the same here, even though it's a restaurant. As we talked about DPZ or Domino's 2 weeks ago, I played that successfully, but also I played it smartly, right? And I don't always do that, but I did with that one. But I think we'll see kind of a similar story here, but better. I was very bullish on Domino's, and I think overall we saw the bullish trend go before and after. So you have to play it smart. Even the best guy, I thought Domino's was going to do a lot better at the earnings. It didn't. That's earnings. That's how that's what happens. But with Chipotle, I think it's probably the most bullish one I've seen in a while, especially from a restaurant perspective. Like I said, up 60% of the year. While we've seen like notable customers, DPZ like Domino's and McDonald's outperform. Chipotle is leading the way with all of them and has a market cap of about $37 billion. $37 billion for fucking burritos, for fucking digital burritos. Awesome, right? I know. And it has a record of beating earnings, unlike some of the other ones we looked at. In quarter two, it beat expectations. And I think we're expecting more of the same in this quarter with the general consensus earning per share of $3.43. That's actually up 750% from its preceding EPS quarter of 40 cents. They're expecting this motherfucker to move, right? Revenue is also expected to gain 17% quarter over quarter to 1.59 billion. Digital sales penetration for the quarter was up 216%, leading to 61% of total quarter revenues. Let me say that again, because it's that same Nike play. Like, they've been investing in digital for so long, we're seeing the dividends pay off. Digital sales penetration was up 260%, not year, quarter per quarter, leading to 61% of total quarter revenue to digital. Fuck. Download the Chipotle app. I have it on my phone. It's fucking amazing. You don't have to pay for delivery, and that's the secret sauce of it. Because for restaurants that have to rely on DoorDash or Uber Eats or Postmates or Favor or something, those apps actually take a really hefty, don't quote me, but like 30 to 40% of the sales to the digital platform, not to the restaurant. Chipotle said, fuck all that. We made our own app. So we keep all of that margin. Our margin's way better. And now we deliver to you, or you can pick it up, or you can go into store. Chipotle was very smart with how they did their kind of digital play. And their app is actually not bad, It's actually really good. You can make your custom burrito there. I've used it many times. Chipotle's delicious, and it's kind of that healthy-ish kind of fast food kick. Anyways, all that to say, hey, they beat expectations last quarter. They're expected to do it again this quarter and some. And also, I love Chipotle because like when COVID really started, value chains were hit, supply chains were hit, restaurants were hit, but also small businesses were hit. So what I loved about Chipotle is they had like a very really sweet like idea to promote the individual farmers and stuff, like the people that supply them guac, the people that supply them lettuce. They had like a small business ecosystem that they built into their ecosystem or their digital play to say, hey, did you like our fucking corn? Well, you can buy it straight from the source, to kind of help their value. I mean, maybe it was self-serving, but also I thought that, I mean, me working for and with small businesses for the past, I don't know how many years, I have a love for small businesses, and I love when other huge businesses do something for small businesses, and I think that they garnered a lot of goodwill from that, but also showed how much they can like incorporate really random shit, like the farmer that makes their lettuce into their Chipotle's digital offering and sales funnel. I thought that was really cool, and when I saw that, it spoke to me like how like advanced their Chipotle's actual digital play was. But anyways, okay, we're gonna keep going, right? I could talk about Chipotle all day. I'm actually hungry, so I'm gonna order some food after this. Maybe Chipotle. But we have also seen price target increase over the last week or so from Credit Suisse, however you say that, Suisse, and KeyBank. So when you take the average of both of them, it's about 1,487 bucks between both of them. So we're still about 150 bucks off of that price target increase if you take the average. But also, if you look at the charts here, hopefully you've been looking at it, kind of looking at, and that's kind of why I like to leave the charts up here. I want to like talk about it while you look at it, right? And so you definitely see the COVID impact there, but also what you see is similar, like a really sweet ass cup and handle on this week. And sorry, I like cup and handles, but it's just what I like to do, especially after, reading a little bit more about them and kind of understanding how to play them more. You don't have to fucking be great at everything with stock trading. You find like three things that you're good at, and you just get really good at those things, and then don't be scared to miss things. Like FOMO is the killer of your bank account. Don't get caught up in FOMO. Trade the shit that you're good at, and don't trade the shit that you're bad at. And hey, for me, this is kind of where I find success, and kind of why my trades are kind of geared in line with those things, right? But anyways, why I like it, because hey, you have this clear resistance. Once it breaks that area of resistance, then you can see it as a way to trade it and say, hey, I know what my stop loss is going to be. I can kind of value or I can put a target price on what my price increase is, because there's actually a calculation you can do, which is super easy to think about, like what your price target increase should be. But also you can see if the volume is coming in for that. So even though this isn't traditional cup and handle, it's still really sexy in that aspect. The volume isn't really there, especially, for the past, I don't know, fucking 4 months, but still it's moving in a great direction. The upward trend here, it touched your EMA 10, which is what you want to see. You don't want to see it too far extended. When it is, I don't like to trade it. When it touches it again, maybe even breaks under, I say, okay, cool, I'm safe here. I can use it for the next leg. And that's exactly what you see. It would have been great 3 weeks ago, but also, hey, it's not a bad position now, because once it breaks that, that, hey, once it breaks out 1384.46, hey, that's an area that I feel comfortable with developing a plan. Don't buy in the middle like a sucker. Buy it after it breaks or when it finds some support from, right? So I think we'll see that here. The other thing I like about this one, specifically for Chipotle, looking at the week over week, RSI is picking up. And since this is kind of like a tech company, the RSI can go, a good 76 right now. It's at 70-ish, 71 maybe. But still, also the MACD is picking up again. The moving average convergence divergence, it's touched a little while. It touched, but it never turned bearish. And then it looks like it wants to, you see this little green candle? It's almost wanting to be bullish, right? So you have that there. Also, hey, you definitely, and you can actually see it even more when you break it down day over day. Hey, this RSI is cooling off, but it's not even touching this 80. Right now it's at 67. It can run hot 80, without blinking an eye. It's done. And you know that because it's done it multiple times. Here, boom, here, boom. But also this MACD is increasingly bullish on the day-to-day. Increasingly bullish. This is getting larger. It's moving away from this bottom line. This green candle is getting better. You do see a little bit of sell-off here, and I think it's because it's coming close to this first slip. It's like a cup within a cup. It's moving closer to this first slip. It touches it, doesn't want to do it yet. But also, that's kind of to be expected before earnings, because people like traders are like, oh shit, I want to see what it's going to do. It's kind of extended. That's smart money right there. And you want to play with the smart money, So once you see that volume coming in over average, you're going to feel safe. But I don't think you're going to see that until you find this break of here, or specifically this break of here, right? So overall, hey, I love Chipotle. I'm getting hungry. Don't trade when you're hungry, just like you don't grocery shop when you're hungry. But anyways, Chipotle, I'm super bearish of, but that's how I'm going to play it. I'm going to play the break, not of this one. I'm actually playing the break of this line here, or if it bounces off and finds support here on the day level at this 10 EMA, which it looks like it wants to do overall. But yeah, but it's been moving. Hey, it had a really, really strong movement earlier in the week on 10/13. So hey, maybe we're a little extended at this point because that was on Tuesday. But still, I think there's a lot of value there. Specifically, when see, hey, it's touching that line right there. It's touching it. Doesn't want to cross it yet. People aren't sure. So you might see a little sell off here before it goes up. But hey, I think that's fine too. Don't trade in the middle. Trade at the bottom. Trade at the top. All right, the other one I'm going to go into is actually not an earnings play, not AMB, that was a few weeks ago. But anyways, I'm going to look at Chewy. And the reason why, look at this, whoa, what is that there? Whoa, I don't know. But anyways, Chewy specifically is not an earning place for me. It's actually because I love pets. I'm a dog lover. I love cats too. I don't care. I'm a big pet person. I've been following Chewy since it IPO'd. I love it, but also I have not really. I mean, I played it a couple times, but not with any looking into it really super hard. But also the interesting news for the week is Jeffries actually raised them to a buy from a hold and giving them a price target increase from $58 to $100, right? So $100 is the most recent price target increase for Chewy's. And if you read the article, it's actually really good. You can just type like Chewy's price target increase or something. You'll read it. But basically, they explained why they did it, and it makes so much sense. Which is what I've been saying for a while. The animal sector right now is red hot. People are adopting pets at such a fast rate due to COVID. And it makes so much sense. We're alone, we're working from home, we can't go out, got a social distance, blah, blah, blah. But also like animal shelters across the country have been emptied as people look for companionship. And the great side effect of that is they're adopting pets. It's been all over social media, especially early in COVID, but still to this day, like animal shelters across the United States are being emptied because people are looking to adopt those pets. Specifically, though, not just any people are adopting these pets. Tech affluent millennials that have money to spend on their fur babies are adopting these animals at a fucking a fast rate. And also for millennials, we're holding off having kids later in their life. Guilty. But also, yeah, so we're getting pets, we're having kids later. So our fur baby is our baby, right? And if you're a millennial that doesn't have kids, that's maybe has more disposable income to spend, you're investing more into your pet. You're making their quality of life better. You can't go out as much. You can't go to Petco, you can't go to PetSmart, you can't go to fucking Kroger or Albert's, wherever you get your shit from, Target as much. So you're buying it from Chewy's, right? So I think that's a super interesting thing. The stock is actually up 146% year over year. Let me reiterate that. The stock is actually up 146% year over year. Maybe it's extended, but also you have a clear avenue to trade it here. And I'm gonna explain that right now, what I mean by that. But also, you have plenty upside, but also their moat. So the distance they're putting between their competition is extending further. What do I mean by that? There's no really. Explain to me another pure play Chewy, like pet, subscription thing that's going on. There's none. There's people that do that, like Amazon or maybe Walmart or something like that. But Chewy is a pure play, like fur baby subscription type service that you can do. You get it shipped to your door in 2 days, or less than that sometimes. But also, what I like about Chewy is they're in their consumer grouping trend, right? And what I mean by that, there's a few groupings, right? You have tech, you have industrials, you can have consumer cyclical, consumer defense, you have energy, right? So when I think about groupings, that's how I'm looking at it. But also, consumer trends are strong as fuck, leading into this. Over the past few months. Looking at the five groupings over the last month. Consumer variants have been the three of the top five. Okay, like tech and utilities are the top two, but still consumer is the bottom three of the top five of the groupings over the past month plus. Consumers are spending, and Chewy is that play, right? They have a lot of price target increases that they have in the past. This is kind of like one of the big ones recently, and I would assume once price target increases start coming, they play them a little bit better. But also when I look at the chart, I'm just gonna say it's another cup. Look at this fucking thing here, and this is the exact. Some of them have been like cup-ish. This is a fucking cup. A 30% increase from the bottom. Right. You see this first lip here. You see volume being bearish, so your shorts are coming in increasingly, and then they're like, oh shit, I'm getting like you see bearish volume coming in heavy, a little bit heavy, and then they get extended. You see this double bottom here, and then you see the bulls start coming in, but also they're waiting as well, right? But you see this volume over average here. You'll see this even more increase, or even increase even more once it breaks this 74.84 mark. But also you see RSI coming up, and this is over the week, right? Week over week, you see RSI coming up. You see MACD after this turn, after this double bottom, start to be green. You see the right side of this cup start forming. Once it breaks that, ooh, hold the fuck on. And it's not far off, It's not too far into the future. So I think this is going to be a really interesting one, especially with these price target increases coming in when they do. Same thing. If you look at it over the day over the past year, boom, nice little thing here. You see volume kind of having that same thing. RSI is the same way. MACD is looking the same way. Wow, this is like almost, I don't want to say textbook, but it's looking really fucking good, to me. Also, like I said, hey, don't buy in the middle. If you're buying here, I get it. I get it. You want to buy it here to get even more value, but also you don't know. So to me, hey, I play it very conservative now. I didn't used to do that in the past. Man, I used to buy here and then like wonder, oh, why the fuck am I losing money? You just have to hold it for longer if you invest in a great company. I get it, but at the same time, like, hey, time value of money, the money I could put here and hold it for it to move right, I can make that money and more, double it in something else that's moving, that's in a hot sector, that has news, has catalyst, has a chart going on. But anyways, all that to say, Chewy, I'm bullish on pets. I'm bullish on Chewy for a long time. But also all like this chart is looking great. Price target increase just came in looking great. But anyways, I'll just recap the kind of five-ish that I went over. I'm looking at Tesla, EVs in general, and NIO. I think that if we see a great delivery numbers with Tesla coming in, on Wednesday post market, we'll see that rise, that kind of like rising tides rise all the ships, or whatever the case may be. You got Tesla, you got NIO, you got EV ETFs in general. I think we'll see that show out, especially if we see a good one there. But also, hey, say it's not good. Say Tesla doesn't kill it. Even better for me. I mean, honestly, I'm just gonna say even better for me, because what it's gonna happen is there's not gonna be a small sell off. It's gonna be fucking profound. It's gonna drop a lot. And then I'm gonna buy the dip. So I'm gonna play it either way. Honestly, we'll see how it goes. I'm gonna play either the rip or the dip. I'll tell you right now, I'm doing both, or either. I'll probably do both, or either or. Not either or, but definitely I'll do either or, but also probably both. Anyways, Netflix is the other one I'm looking at. Same kind of difference with Tesla. It's going to be about the subscription numbers, and if they show that they can kind of like stem the tide of people like not getting Netflix, maybe. So you're gonna have to see those subscription numbers kind of like beat what they said their expectations were, which were already very conservative. So a little bit more bearish versus bullish. I'm in the middle with Netflix. Chipotle, super bullish. Like I said, hey, their digital play, similar to the Nike, similar to the Domino's thing, they invested a lot in digital, and I think we're seeing that dividends start paying off, especially here in this quarter and the next quarter. Because the whole digital experience for Chipotle is fucking amazing. And they fucking have carnitas. Fucking delicious. Is guac still extra? I don't know. Anyways, Chipotle, I'm really excited about. The other one is going to be my baby Chewy, and that's because I'm bullish on pets in general, but also the trend to pets, especially for COVID, especially like those tech affluent millennials and Gen Zers that are adopting these pets at a higher rate, that have disposable income, that don't have kids, that are having kids later, buying houses later. They have that money to spend on their pets. They're looking for the least path of resistance like lightning, and of course, it's something like a subscription service that they don't have to go out, and they can keep their pets happier longer. All right. So, all right, those I'm playing for. I'm watching this week. Not necessarily playing all of them, but I'm definitely watching them. I'll probably play one or two this week, to be fair. All right. Before I go, because this thing is hitting, I don't know if you can tell, but this Old Humble whiskey, straight whiskey, is really good. And I want some Chipotle. But anyways, Catalyst Corner, parting takeaways, my social, Boeing actually it was like Thursday evening, Friday, European regulators passed Boeing to fly. So their inspector said, "Hey, we're ready to fly." I was actually watching this for a few months, specifically to kind of see how Boeing's going to react. I think they're up like 6 or 7% on the Friday, but the U.S. regulators still have to go, and those 747s or whatever that got grounded or whatever. European regulators said, "Hey, they're good to fly." The U.S. still has to kind of go through that. It's a catalyst. I think that you have to take that with a grain of salt, though, because just because Europeans say they can fly, and even let's say the United States regulators or inspectors say they can fly, specifically, so it's BA is Boeing, right? We definitely saw that come in. Where is it at? But yeah, so where Boeing. Yeah, we see a really hard sell off of Boeing, and we saw like some, it was up about 2% over the last trading day. Boeing's taking a big hit. If you look up here, it's trading at its high of 446 right now. From a low of like 91. Right now, well, sorry, yeah, right now it's trading at about 167. I think this is a really strong area. This is a really strong base, honestly, when I look at this. So Boeing is actually one to look at. I think it has a really strong base here at 160-ish. If it breaks that, hey, you're kind of fucked. It's going to go all the way down to at least 89. Or maybe even here. So you have a really long way down. But I think there could be a lot of upside in Boeing in the future. But what I'm going to do is I'm going to wait to see, because just because Boeing can fly doesn't mean people are going to buy them. As we saw with United last week, the CEO came out and said, "Hey, it was pretty shit." So last week, United had a earnings report, and revenue dropped almost 80% for the quarter. And the CEO basically came out and said, "Hey, there's some light at the end of the tunnel, but honestly, it's kind of like very bearish." And he doesn't expect business travel, which is basically airlines bread and butter, to kind of get back to normal until 2024. This week we do have two earnings, I think. For airlines, we have American Airlines and Southwestern Airlines reporting this week. So we'll see kind of how they play. And I think that's going to like really decide for me if I want to get in Boeing. I think that really, between Boeing, American Airlines, United, Southwest, kind of like having like more negative sentiment in the recent future, or in the recent past. Like I think there's smarter money to be played, but that's still news. Maybe like Boeing coming in and saying, "Hey, European regulators said we can fly," is it could be a catalyst. But honestly, if you look at it over time, hey, they're in a very clear downtrend. They really did find the support at 167. You see this long ass base coming in, but people don't know what to do with it yet. But they still have government plays and stuff like that. But Boeing, news came in. We'll see what happens, especially after these airlines report this week. But also, follow me socially. Like I said, real_bullish. I appreciate the support. I appreciate y'all guys watching. I appreciate this Old Humble Distilling straight whiskey. This is good. I hope you have a great week. But also, like I said, hey, protect your chicken. The market doesn't give a fuck about your money. You haven't give a fuck about your money. But also, hey, we're right before elections. Be smart with that shit, because markets are very fickle. Markets are just a collection of people and algorithms, to be fair. But also, like, hey, no one gives a fuck about your money. Like I said, you gotta care. Play smart. Don't chase. Fuck FOMO. And good luck. Peace.